Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of Bodal Chemicals Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Patel, the Executive Director. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everybody. On behalf of Bodal Chemicals Limited, I extend a very warm welcome to everyone for joining us on the call today. On this call, we are joined by our CFO, Mr. Mayur Padia. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchange and our company's website. We will give you a quick overview of the company's performance, and then Mr. Mayur Padia will walk you through the operational and financial performance in detail for the quarter. We are India's largest integrated manufacturer of dyestuffs, dye intermediates, and hold a meaningful market share in the world. We also have basic chemicals, caustic soda, and new product group is added, which is benzene downstream products. In today's environment where Indian suppliers are emerging as preferred partners globally, company has a good opportunity to grow further in the future. Till date, we have not got meaningful advantage of introduction of an anti-dumping duty on TCCA by Indian government. This is because of the huge import quantities of the product done by the importers of India in the anticipation of the duty coming up. Prevailing prices have definitely improved, but proper impact in top and bottom line should be seen in third and fourth quarter of the current year. Coming to the performance, during the Q1 FY26, company achieved a total revenue of 458 crores, growth of 8% year-on-year basis. The absolute EBITDA stood at 52 crores, a 40% growth on year-on-year basis. This is led by better realization on year-on-year basis. Turnover and margin remained similar on quarter-on-quarter basis. Interest, depreciation, and other overheads have increased at the company level on capitalization of Syca's benzene downstream project. On the other hand, there was not much contribution by this project at top line level during the quarter. Hence, the increased overhead offset partial profitability of other divisions for one more quarter. During the quarter, our standalone profit after tax stood at 10.34 crores and consolidated profit after tax stood at 9.53 crores. Coming to the dye intermediates, during the quarter, dye intermediates division has performed satisfactorily. In Q1 FY26, revenue from dye intermediates was 150 crores, a degrowth of 4% year-on-year basis, due to decrease in major raw material prices like aniline oil and naphthalene, followed by a finished goods prices. During Q1 FY26, H-acid and vinyl sulfone prices were near to 503 rupees for H-acid and 247 for vinyl sulfone. Being an integrated dyestuff manufacturer, we produce major dye intermediates products, and about 40% of these intermediates production is captively consumed, resulting in a cost advantage for our dyestuff business. The balanced production of dye intermediates is served in both domestic as well as global markets. Coming to the dyestuff, in Q1 FY26, revenue from dyestuff stood at 122 crores, a degrowth of 10% on year-on-year basis due to a decrease in major raw material prices followed by finished good prices. Coming to the basic chemicals, about 40% of our basic chemical is captively used for dye intermediates. During the Q1 FY26, revenue from this division grew by 115% year-on-year basis due to increase in the raw material prices, the sulfur, followed by finished good prices during the quarter. Revenue from the basic chemicals stood at 45 crores, a growth of 139% on quarter-on-quarter basis due to improvement in volume and price. Coming to the chlor-alkali business, in Q1 FY26, revenue from chlor-alkali business stood at 84 crores, a growth of 8% year-on-year basis, where the revenue degrowth of 8% on quarter-on-quarter basis. During the quarter, the caustic soda price and volumes remained normal. We are targeting to improve capacity utilization near to 90 to 95% in coming couple of quarters. Coming to benzene derivatives, in Syca's benzene downstream products, company has started normal production with required quality norms. However, due to steep competition and slower demand, margin is still under pressure. This unit has started contributing to the top line in Q1 FY26. Contribution will further improve to top and bottom line by quarter-on-quarter basis. Coming to the subsidiaries, Fener Boya, our wholly owned subsidiary in Turkey, is still experiencing hyperinflation. During the quarter, due to AS29, there is a 1.45 crore loss, and the same is already a part of the declared result, whereas our Chinese and Indonesian subsidiaries have performed overall satisfactory. Thank you, and now I hand over the call to Mr. Mayur Padya to walk you through the financial performance.
Good afternoon, everyone. The overall performance of the company has been satisfactory for the quarter gone by. Our standalone performance for Q1 FY26 is as follows. Total revenue for Q1 FY26 stood at rupees 447 crore. EBITDA stood at 52 crore in Q1 FY26 with a margin of 11.6%. Net profit for the quarter stood at rupees 10.34 crore. Our consolidated performance for Q1 FY26 is as follows. Total revenue stood at 458 crore for Q1 FY26. EBITDA stood at rupees 52 crore for Q1 FY26 with a margin of 11.3%. Net profit for the quarter stood at 9.53 crore for Q1 FY26. Division-wise performance on a consolidated basis for the Q1 FY26 are as follows. Dye intermediate revenue stood at 150 crore. Dyestuff revenue stood at 122 crore. Basic chemicals revenue stood at 45 crore. Chlor-alkali revenue stood at rupees 84 crore. Total production volume on a standalone for the Q1 FY26 are as follows. Dye intermediates reported 6,892 metric ton. Dyestuff reported 3,741 metric ton. Basic chemicals stood at 56,731 metric ton. Chlor-alkali stood at 20,557 metric ton. With this, I conclude the presentation and request all the participants that the floor is open for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Ketan from Smith's Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Just a couple of questions. Sir, in the dye intermediates, as you had mentioned in your presentation that top line has dipped. So similarly, we are witnessing that volumes have also declined. But you also mentioned that because of decline in RM prices, finished product prices have also declined. If you can help us, sir, like the dip in top line is commensurate with the dip in the volumes. So this additional dip in prices, where are we like factoring in that?
Yeah. See, major dye intermediate, if we consider when there is no degrowth, that our one of the product that is beta naphthol, we have not run the factory for beta naphthol for the quarter. So that's why we have considered dye intermediate volume. Yes, there is a degrowth by about 400 metric ton or so. But the dip is mainly in some part finished good prices has reduced to some extent because of the reduction in the naphthalene prices and aniline oil prices. But otherwise, it has remained more or less similar to earlier quarter.
Got it. Sir, this beta naphthol, what is the quarterly run rate which we used to run this plant earlier, and how much volumes we have lost with the closure of plant?
So, see, earlier quarter it was about 400 metric ton, and maximum contribution from this is expected about 1,000 metric ton in a quarter.
Got it, sir. Sir, so coming to the benzene derivatives, sir, can we share the volume figure for this quarter?
Yeah. So here also there are two parts. One is PNCB, ONCB, and the second part is MCB. Now MCB is the first stage of production, and strategically we have not run that plant during last quarter for MCB. For PNCB and ONCB, whatever we have run, the volume is 1850 metric ton, which is about 20% of the capacity. So PNCB, ONCB has a capacity of 3000 metric ton per annum, per month. And if we consider that, then about 20% utilization is there for PNCB, ONCB products.
Got it. Sir, any specific reason like this PNCB can be converted, so the NCB is converted into PNCB and ONCB, right? So ideally we are making NCB and we are converting that to PNCB, ONCB and we are selling that, right?
Yes, so we have a MCB plant and then we make MCB and we don't sell it in the market, and we convert that into other products and sell those in the market. But because of the lower utilization, we are not running the MCB plant at the moment because we are getting it at a very good price from the market only. The plan is to start that plant also very soon. The utilization, which was around 20% in the quarter, is now up to 30%, and it is within, I think, 3 months that should cross the 70% mark, the utilization, because the major consumption and customers are pharma based. So in pharma, we have got the approvals already. The product is already approved in the major customers, but it takes a long time for the overall approval process to be finished and get a large size orders. So that is expected by Diwali time. So then I think once we start catering to the major customers, then we should cross 70-80% easily.
Got it. So the 70-80% we are targeting by this fiscal end?
Currently it is 30%. For the next quarter it will be slightly improved, and by Q3 it should cross 70%, and by Q4 it should be maximum, which is around 80%.
Got it, sir. So just one last question. Definitely, sir, so considering the performance over the last 2 to 3 years, there has been a commensurate increase in EBITDA margins. How you see this trajectory to improve with ramp up in your businesses like your benzene derivatives and all, and where we see this margins to settle over the next 2 years?
We are already in the range of around 10 to 12%. Still, there are 2 businesses which are yet to contribute at the margin levels, which are benzene derivatives and TCCA business. So with time, with TCCA, the imported quantities will not last for too long, I think another 1 or 2 months only. And then we should get good volumes from the local markets. We are also working on the export business as well. So I think in another couple of months, we should be doing better in that business. So with the higher utilization, that should start adding to some contribution to the margin levels. So that is one thing. And second is benzene derivatives is also running at only 30%. And the market scenario is also a little challenging in those product lines. So with that improving to 70-80% level utilization, that should also provide us a little bit more better margins overall. That will also start contributing to the low bottom line. So I think in another 3 to 6 months time, I think that those two businesses will also meaningful contribution we will see. So that overall should strengthen our EBITDA numbers in the coming few quarters and going ahead.
Got
So
it,
then
sir.
I think blended, if we are doing about 10 to 11% right now, I think blended we should be able to achieve couple of percent more, I feel.
Yeah, thank you, sir, for that explanation. Thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. I repeat, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question is from the line of Amit Mehendale from Robo Capital. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, sir, you're audible.
Yes,
Please
yes.
go ahead.
Great, thanks. So my first question is on the benzene revenue for Q1. Could you quantify in rupee terms what was the revenue? Benzene plant?
Yeah, it has contributed 13 crore as far as top line is concerned.
Right, and that is at 30%, right? Is that correct?
Yes, for the product, 20%. 20%
Okay.
for the product what we are selling. As such, NCB we are going to consume captively, so that is not going to contribute at to the top line level.
Right. So I was just looking to, figure out, because there was some earlier discussion as well on the call for this. So for the entire year, what are we expecting the benzene plant revenue to be? So FY 26-27, if you could, give a ballpark number. Hello?
Yes.
Yes, Amit, sir.
Hello? I was looking for benzene revenue for FY 26-27. Not sure if I'm audible.
For the whole
Yes, sir,
current
you are
year, I think we should do about 100 crores of top line from the benzene business.
For FY 26?
See, earlier we were targeting about 150 crore turnover from this business in the current year, but there is some delay. And conservatively, we are targeting about 100 crore of revenue. It can be
Right.
even better than this.
Right. Thank you, sir. And at full capacity, let's say 80% capacity, I think that is close to 300-350 crores, right? So do we expect to hit that number next year?
Yeah, next year we can have a full capacity utilization and turnover can be near 300 crore.
Okay, perfect. That's it from my side. Thank you very much.
Yeah.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. I repeat, a reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity, sir. So my first question is on, our FY 26 guidance that we had given in last quarter, around 1,900 crores on the turnover side. Are we on track for that? I mean, with the current pricing?
Yeah, we are on track to achieve 1,900 crore, near to 1,900, about 1,900. That can be plus or minus 5%.
And margins of 11-12%, right?
Yes. So this is turnover, and there is a operating income that can be about 35 crore. So overall, you can say that we can cross 1,950 crore revenue as a top line.
Okay. Sir, can you share what is the pricing for sulfur and sulfuric acid presently? I mean, in May, it was around 27,000, 28,000 for sulfur, 12,000 for sulfuric. What is the pricing like now?
It is still in the same range. The sulfur is around 27,000 only, and the sulfuric is also around 12,000 only.
Okay. So the spread is, I mean, still having an, impact on our margins in any way? I mean.
No, it is the same as the first quarter only. It is in the similar range.
Got it, sir. That's all from my side. Thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Hi, am I audible?
Yeah.
Yes, sir, you're audible.
Okay. Just wanted to understand where does the management see the sales growth coming from, and what should be the ROE expectations from our company in the next 2 to 3 years?
The present business model will add about 300 crore turnover, as mentioned, to the current run rate, whatever we are doing, about 450 crore quarterly. So we can reach to next year 2,100 crore easily. And over there, 12 to 13% EBITDA, that is what we are targeting. So that will lead to about 70-80 crore of net profit in the next year. So this will have about 7 to 8% ROI for the company. So in near future, we are targeting this, and then whatever additional project we take up, that will have an impact on this.
So, I mean, you mean to say that we'll need additional capex for the growth to come in?
At present, in a couple of years, we are not targeting any capex. But yes, there are several opportunities which are there available with the company, that by doing some capex, we can add to that.
Okay.
We have no major plans for any major capex. We are focusing more on consolidating the actual current setup. We are yet to unlock more top and bottom line from a couple of the businesses. So we are focusing more on that. And looking at the global scenario, there are some uncertainties right now, and we also want to have a better leverage profile. So I think going ahead for a couple of years, we don't want to do any major capex. Small debottleneckings or small brownfield expansions can be there, but I'm talking very, very small. So that can be in line, but nothing major at all.
Okay. What is the export contribution, and which are our major countries for export? I mean, just wanted to understand how much is our contribution comes from the US, since the US tariff is in place.
Our export for the last quarter was 22% of the total revenue, and out of that, from US was hardly 1% or so. So it's a negligible when we consider at the total level.
Okay. And amongst our clientele, because a lot of our clientele is from the textile industry also, like Trident and Arvind. Do you think that is getting affected? Because even their sales might be affected because of the export scenario.
Our dependency on textiles has been decreasing with the diversification into other businesses like benzene, like TCCA, like chloralkali. Earlier, major chunk of the sales was dyes and dye intermediates, so they were kind of depending too much on the textiles. But now I would say the textile sales will not more than 35-40%. So we have not really felt any slower demand because of the US tariffs. So as of now, our volumes are quite similar to the volumes in the Q1. And going ahead, yes, today the tariff is abnormal when it comes to US, but I think that is not going to be around for a long time. So they will find a way, and I think business to US should become normal. So I think it is just a matter of time, and we are not really affected by it right now.
Okay, great.
Another important point.
Yes.
Yeah. Other important point here is when we say for dye intermediates, wherever dye stuff is being produced, dye intermediate is being produced in India and China only. China is not growing in dye intermediate since several years. So dye intermediate is definitely going to consume. So that will not have any impact.
Okay, fine. And if you could tell me what is the current debt right now, and what is the cost of debt, and going ahead, where do we see this debt? Where and how do we see this debt coming down?
Yeah. See, present term debt is about 507 crore, and working capital is near 350 crore. So there is a regular, rather scheduled repayment of about 120 crore in term debt. Plus, we are targeting some asset sales of our Vatwa plant, as well as some part in Punjab also. So by selling that, whatever revenue comes, realization comes, that we want to deploy in the repayment of debt only. So by end of current year, we are targeting at least a reduction of 150 crore. It can be in the range of 150 to 175 crore reduction in term debt. And working capital will remain more or less in the same level.
And what is the cost of debt?
Also, cost of debt is 8.5 to 9%.
Okay. And you were saying about next year also?
Yeah, next year we are targeting similar reduction in term debt.
Okay. So if I can just sum it up of the conversation, we are trying to increase our capacity utilization, reduce the debt, and trying to play with the things which you are having right now without doing anything new, and getting the company back on track, back to profitability, back to good ROE, and hopefully getting it into a ROE of 8.5. Is that a reasonable understanding?
Yes, you are correct. In other words, if I say we are targeting debt to EBITDA near 2.5, and then we will consider next growth plan.
Right. And you're confident on all the products, and no longer you don't see any pain or pressure on the prices of these products, right?
Not at present.
Okay. Okay. Okay, guys. I'll just fall back in line if there are any other questions. Thank you so much, and all the very best.
Yeah.
Thank you. Our next follow-up question is from the line of Aditya Ketan from Smith Institutional Equities. Please go ahead.
Thank you, sir, for the follow-up. Sir, our recent news on selling of land in the Rajapura unit, if you can, sir, highlight more. So 3 questions on this. So first is, so what is the rationale for selling the land? Either we could have used to expand the current caustic soda capacity on it. Second, sir, what is the actual size today of Rajapura unit, and how much freehold land we now own, and how much the land is constructed for the caustic soda? And third, sir, what is the actual cash inflow? I believe it is mentioned around 50 crore. So is it so? Is this the final amount, and this excludes the GST and the stamp duty, whichever has to be paid?
So, so Rajpura unit is the chlor-alkali unit. For chlor-alkali, selling chlorine is always a bottleneck, and we already have 4 adjoining ancillary units that consume chlorine, and this is a very common concept across India, where there are chlorine-consuming smaller units are set up, and we already have 4. But at the same time, we still have to sell a lot of chlorine by tonners, by transport to other buyers. It is a very big advantage if you can have pipeline buyers. So the idea was, because a lot of the quantity we have to try and sell outside in the market, there is always an attempt to develop more and more pipeline buyers. Now the land sold, actually not sold yet, but it's in the process, and that client is one of the largest consumers of chlorine in India, and they already have a plant set up next to ours, and they had run out of their older land. So only way they can set up one more plant is to have more land. Now this has to be adjoining, because this is chlorine supplies are very hazardous. It cannot be far, and then the infrastructure to supply to a unit far is a lot. It's in crores. So looking at our relationship, looking at their capacity to use a lot of chlorine, we have decided to join hands. And so we have the only option was to sell land from our own parcel, our land, our site. So we are selling almost about 8 acres of land to them, and this is not a real estate deal. This is more of a business deal, which is going to benefit both of us. So the price of the land is not really too much, because it's an industrial area. So it's around 5 crores that we will get for the land, and GST or any other taxes, any other government fees are all extra. So this will be 5 crores is what we will receive. And coming to the size, and coming to why selling our own land and not use it for later purpose. So we total have about 125 acres. The existing plant is set up in about 50 acres only. So this has more than 70 acres of surplus land. And we already have within the plant, we have a lot of spare land where we can use it for the future expansions. And so in chlor-alkali, if I expand, I also have to look for chlorine buyers. It's not really possible to sell everything in the market by transport. So this is a very strategic call. This is also like a compulsion for us. So I think we feel great about it that we were able to develop. We already developed one buyer earlier. They have started their operations a few months ago. So now we are adding one more. So we have a lot of land. I think in the next 10-15 years we are safe. We don't need any more land, and strategically also this is a very good move for us.
Got it. So if we to do some debottlenecking, that can be done, as you had mentioned. So 70 acres surplus minus 8. So still we are having 62 acres of land with us.
Oh yes. We can set up, we can expand the chlor-alkali, we can get into chlorine derivatives, we can set up any other plant. The company has a lot of land, very suitable for this chemical kind of a manufacturing. So we are going to always reserve some good, decent size of land for our future prospects.
Got it. Sir, any idea onto the chlorine prices? I believe now the chlorine prices have become positive. Earlier, they were negative. So any change you foresee, setting up this plant of Shivatech and selling them chlorine, does this give you material benefit in top line as such?
Chlorine prices are still negative, but not too much. They are around 1,500 to 2,000 rupees negative at the moment in the North Indian part. That is still not a bad pricing, because in the past we sold it up to -5,000, -6,000 also. In Gujarat the prices go up to -10,000 also. I think more than the pricing, the disposal of the quantity is a challenge. Usually whatever negative pricing happens, that is made up by the caustic prices. So if chlorine agar ghatta hai, to caustic का price always बढ़ता है in a normal market scenario. So I think that negative number is not really, doesn't really impact. But to successfully take care of all your chlorine is very important. By captively using it, by having next door customers, by selling it in the market, that's always a challenge that the chlor-alkali player faces.
Got it, sir. Got it. Okay, sir. Thank you, sir. Yeah.
Thank you. Our next follow-up question. The next question is from the line of Mohit Chugh from Shubhlab Research. Please go ahead.
Hi, sir. Am I audible?
Yes, sir. You're
Yes.
audible. Please go ahead.
Hi. Sir, actually, I am new to the company, so just wanted to understand, like, I was seeing the past 10 years performance. So between 2014 to 2019, we were closing the margins in kind of 18, 19, 20 range. So just wanted to clarify, with ramping up of benzene derivative sales and TCPA, can we expect the similar kind of margins in future?
Yeah, that 2014 to 2019 was a little different era. I think that was a time, I think, where Indian industry overall performed better, Indian chemical industry. I think most of the players, if you see that their numbers were at peak, margin wise and bottom line wise. I think that was a period where a lot of the transition was happening because of the disturbances in China. Since 2022, since the Ukraine-Russia war, there's a lot of disturbances and uncertainties globally. So since the last 3 years, the overall margins are very cyclical, and there's pressure on the margins. So we are back to around 11%, I think, which is very healthy. With the addition of these two projects, when we reach the good utilization numbers, I think going back to 18-20% in a normal scenario, I think is very difficult to perform. Yes, maybe in some extraordinary years we can reach those numbers, but I think in a normal market scenario, I think our goal is to reach around 14%. So, but blended, it could be anywhere between 13 to 15%. That is in the market, in a normal market scenario.
Got it, sir. Got it. And sir, as you mentioned in your previous comments, like TCC channel inventory has been stocked in India prior to ADD. So, if you can tell a pricing trend happening now after the imposition of ADD.
Pricing is definitely increased a lot. It has increased by the duty amount. So the pricing of TCC in the market is now around 160. It is increased by around 50-60 rupees. And it is, I think, just a matter of a month or two, because there was a lot of imports right before the implementation of the duty. So I think we have started getting some inquiries and some dispatches are being done. I think another 1 or 2 months, we should have a sizable share of the Indian market. At a good price also.
Okay, sir. Thank you, sir.
Thank you. Our next follow-up question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity again. So just wanted to understand, we post around 2 to 4 crores other income consistently every quarter. Just wanted to understand what is exactly the nature of the other income.
It is mainly interest income. So we have about 40 to 45 crore of deposits with bankers as per their requirement of term lender, and another about 15 crore deposit with electricity provider. So mainly the interest from this deposit is the regular other income for the company.
But even, sir, if I consider that 60 crores, we have posted around 11 crores almost. That is around 20% return on the interest. So, on the fixed deposit that we have kept. Is there anything apart from the treasury income? Because the number looks optically big.
See, if you see the quarterly, as you mentioned, it's 1.5 to 2 crore. So when 60 crore of deposit, that will fetch about 4.5 to 5 crore of interest. So that matches with the number.
Okay.
Yeah.
And okay. So I also wanted to know what is the contribution that we have got from TCCA in this quarter, and how do we see the entire year after the duty was AD was implemented on Chinese goods?
TCCA has contributed 3.2 crore as far as revenue is concerned, and production was 187 crore only, metric ton. So we were already having some inventory at the starting of the quarter, and the offtake was less, so we have not built the inventory and blocked the fund. So once we have a reasonable clarity about the future and the stock get reduced, we will once again start the production.
Right. So would it be fair to say that by Q3 or so we might see some space to sell more TCCA when the inventory levels start coming down?
Correct. Perfect.
Okay.
Q3 and Q4 we will see that.
Okay. Thank you. Thank you, sir. Thank you. That's all from us.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. I repeat, anyone who wishes to ask a question may press star and one on their touchtone telephone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I repeat, may all the participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. A reminder, all the participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. May I request and remind all the participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. Anyone who wishes to ask a question may press star and one on their touchtone telephone. I repeat, a reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone.
We can close the call, ma'am. Hello.
Thank you. Okay, sir. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Ankit Patel, the Executive Director, for closing comments. Over to you, sir.
With this, we conclude the call and would like to thank everyone for joining us today on this earnings call. If you have any further queries, you can connect with us. Thank you.
Thank you. On behalf of Bodal Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.